Hello traders, Nick Shaheen here looking at bonds. This is going to be like a helicopter view of bonds and stocks and how they interact. In my personal opinion for bonds, as it was for 2019 and as it's going to be next year, some information came to light a little bit overnight. Today is 12/27, I believe. So nearing a fantastic year in stocks, but not a bad year in bonds. We're looking at the 20-year bonds, the TLT. It's an ETF. It's an easy way to look. Everybody knows it. It's an easy way to look at it. It had a good year. It was up 20% at one point, 22% at one point up here, and then it fell. This is where I sent out notes to short it, and it paid. It was tough, but it paid. Everybody was buying it like it was going out of business, like it was going to disappear, and they needed to grab some. So, and now the setup for next year, what's it going to be like? First of all, the overall perspective of bonds versus stocks. If you think about it, they're either or based on what people believe, because you hear it, oh, should I invest in stocks or invest in bonds? Just by you saying that means that I either have money for stocks or I have money. So to invest one, I have to take from the other. So they compete for Wall Street money, retail money. So they take away from each other. So they should move in opposite directions, generally speaking. This is more obvious. I know statistically somebody can go out there and give me the math on it and it's false, but I know what I see. And during the day, if bonds fall, the stocks are rallying, and vice versa. This is not true when you have bond-related news, like an auction of sorts or an ECB action of sorts, which brings me to the other one. So you've heard the acronym TINA, which stands for there is no alternative. It was part of my thesis for this year. When the S&P was falling, I said TINA works for stocks too. So TINA is overseas. Let's use Europe as the overseas thing. And Japan. They have negative rates. So if you buy bonds there, it costs us money. So if I wanted to buy bonds, I have to pay them to hold my money, which is ridiculous. So there is no alternative for big money over there but to come here and buy the US bonds, which pay, let's say, 2%. What is this today? So it is a no-brainer, so to speak, to get 1.5%, 2%, whatever bond they choose, 20-year, 30-year, 10-year, and benefit, at least not lose money. So, and the U.S. bond is as safe as the others. In fact, probably safer. So there is no alternative. But the stocks were getting 10%, right? We were up 10%, people were complaining. And so the TINA works for stocks. So why buy bonds over there when they're risky? Because I believe, it's negative for a reason, and it's an experiment, so it's risky by definition. So I don't want to cause any alarm over there, but I could invest in relatively safe stocks like Apple and, indices that are heavy with the big big high-tech companies that have great balance sheets, great incomes, good future. So it's also TINA. That's why the stock market was not a short when people were saying, oh my God, China tariffs this and China tariffs that. So back to the point, the bonds thesis carries on. Why? Because we just learned that the ECB is not likely to get off of negative rates next year. So they're not going to start raising rates to neutral, to not cost them money. So they're going to still bid the bonds. So from that perspective, the thesis is that if bonds fall here, if the TLT drops, it will have a floor. So let's treat it as a chart. Okay, so now I'm looking at the TLT as a chart. Forget what I just said. It is a viable trade as far as a pivot point, and let me show you how. I'm going to mark it up a little bit to make it clear for me. That's the only way I can see things in perspective, in good perspective. Okay, so this was wrong at that time because this was wrong. The steepness, not that it rose how high it went, it's just how fast it went and the thesis behind it. Everybody saw it a no-brainer to own bonds up here. Gold too at the time. That was a short. It fell apart. but it fell apart to a sane place. So if you consider that this was the base of the rally, this eyeball, this is about half of it, right? So Fibonacci 50% retracement, that's fine. That's normal. That's why it did this again. Again, not a place to start chasing here. This was a mini pivot point. So the point is, it went back to the 50%-ish. And again, recently. So what do we know? We know that this zone was resistance, and then they finally broke through it. You could argue that it's here and here before that. And then they almost gave it back. They almost gave it back, but we have an established support zone 3 times over. So I can assume that support will hold one more time until it's not. Okay, so if they do this and they bounce again and then they lose it, okay, then we can talk about maybe revisiting this, which is entirely possible. This was a big rally, even from here. Then now we have lower highs stomping on a floor. Odds are, if this holds, they're going to break that trend line, and then you have people that love to chase trend lines. I do too, but I prefer levels too, and I'll show you the difference between the two. So the point is, the assumption going into 2020, oh my gosh, 2020, is that bonds will have a floor and dips should be bought. By should, I mean the market is likely to buy them. So if I say, okay, this was the bottom there, oh, there you go, magic. Then we might do some sort of a, hold on, let me do this first, so I don't run out of room. So if I say that the recent lows are going to hold, so this is a level versus a trend. I'll show you what the trend drawing would look like. They could fall back to this consolidation zone right here, right? And then bump a little bit, and if they want to finish the job, they'll probably fall to the prior breakout zone. Okay, these are my estimates, and they're usually pretty accurate. As far if this happens, this could happen. Okay, I'm not calling for this, but this is the downside scenario. Okay, so the upside scenario is, so this is where trend line versus level. So if you argue that this is a trend line, if they break it, they're going to rally, right? That's one way of drawing it. I prefer drawing it as a level. If they break through the level, they're going to go to the next level of failure or pivot level, and then maybe they'll finish the job. Okay, these are the immediate moves. So the levels to trade. I could argue that I could draw a line, a mini line here too. It all depends on how quick I am trading. All right, so I'm going to do it this way. This might confuse some people, but the point is, if I'm a fast trader, I'd be looking at this point right here. If I'm a slower trader, I'd be okay seeing red down to 134. If I'm really fast, I want to chase right here on the break of the trend line of some sorts, or wait for the level to breach and then chase up. I can sell put spreads. This is the one thing I can do. If I know there's a bottom, then I go way out in time and sell a put spread and forget about it, or sell many put spreads out in time and look at the fan thing. So the point is, even though it looks like an inverse cup and handle in the making or a debacle in the making, I think that they will have a floor. Now, the other thing to look at is that orange line. That orange line is the point of control. So this is where, whoa, okay. So buyers and sellers agreed the most. Just curious. Ooh, okay. So where buyers and sellers agreed the most is this point in time, for this period of time we're looking at, which goes back to last February. So it tells me that if price falls into it, those active buyers and sellers that have been active, we know that they have been active here, they're going to activate again. So they're going to buy, sell, buy, sell, buy, sell. What does that create? Congestion. So price is not going to go in one direction. If it's only buy, 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 or sell, 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 it's not going to continue falling. It's going to see buy, sell, buy, sell, buy, sell. It's going to hit the brakes. So it will provide support. That's the theory. So, I can get more granular with it if I'm a fast trader. I can go down to a 30-minute chart and try to get smarter that way. Okay, so 30-minute chart, you can see how exactly right now, today, at 8:35 Pacific, we are at a place where they should stall. And look how close it is to that smaller trend line. That's another stall point. That's another stall zone. Definitely stall point. So it all depends on how quickly I am, how fast of a trader I am. This is a 120-minute, 2-hour chart, a 4-hour chart, daily chart. And if I wanted to look at the big picture, I go to a weekly chart to see what's going on. Well, look left. So now we have more information. This whole zone was a big top a few years ago in 2016. Okay, they shot over it, but I told you this was unreasonable. But we're back to the neckline. So they broke out from this neckline right here, and they're back to it. In theory, it should provide support. And if I were really conservative, I would draw the neckline. I'm keeping my eye on the market with my left eye. Somewhere here. See that one candle right there? That doji candle right there? Not the big one here, this little one. The top of it matches up with this one here. So this is clearly an emphatic place. This is an anomaly. Look at that, perfect. So it's not a coincidence. 135 is not a coincidence. So the bulls will bet on 135-ish. This is a weekly chart. Okay, so here, the point of control is much slower down here. So we can't make that same argument. Okay, it's a point of control. But we can make a different argument. The value area, the most active area, starts at 130, 130 and a half. So as they fall onto it, it was resistance until they broke out of it, and now it should provide support. So we still have the volume profile argument. So the point of control is part of the volume profile. If you don't know what that is, reach out. It is the most important thing I use on the charts. By the way, these charts are from TradingView. I may have a link down below. I had a couple questions on that. So the bond, let's recap. The bond market should not sell off like crazy because there is no alternative. What are they going to do? Put billions of dollars and cost them millions on top of it just to hold the money at the bank? It's like going to the bank, say, hold my money and let me pay you for it. And that just doesn't make sense. So they have to buy the U.S. bonds. Now the difference is if the U.S. Fed decides to go the route of negative rates, and I don't think that's possible. It's like anti-capitalism. So I think I heard that said once, and it's like, totally, yeah, I get that. We can't, the bonds, if you lend money, you can't cost money. If you lend money to somebody, you expect a return. You can't just say, I'm going to pay you extra on top of the money I give you. That's just nuts. I don't know how banks are surviving over there. They must be doing some swaps. Okay, so the big picture is the bonds, in theory, have support. The secondary part to it, the charts, in theory, have support on multiple time frame. We looked at the daily, and I say that this right here, 134-ish, is support on the daily. So, if we went to the weekly, we saw that it was a pivot zone, and it's also kind of supportish. And if we went granular, we could also look at different things. Depends on the speed. So I don't make decisions without looking at the fundamentals and the charts. So if I'm only using the fundamentals, which are solid, I could still mess up the trade because I don't know the charts. And I'm competing against somebody else who's trading on the other side of my trade. When I buy something, somebody's selling it. So why am I smarter than them? They're using both tools. Why am I not? I'm at a disadvantage. So I would educate myself to learn the charts, because even fundamental traders either need to learn charts or get somebody to help them that knows charts. Down below, there's a link to chat room. Join or subscribe to YouTube channel. Is free. And share this video.